Hi, folks. This is Luke Bujarski, co-founder over at Extenteam, the trusted outsourcer for the property management ecosystem. Today, I wanted to quickly hop on and share some exciting key findings from our latest State of the U.S. Travel Accommodations Workforce Report. Now, this is something that we publish every couple of quarters to provide our existing and future partners some guidance in terms of what to expect in terms of labor market supply, demand, and overall cost of doing business for accommodations operators and the individuals that are operating within the ecosystem. So let's go ahead and get started and talk just briefly about some of the key indicators, leading indicators that we look at when assessing the market, and which includes workforce deficit, wage inflation, job openings, and worker churn. And we're going to go into these in greater detail. But before we do that, we really have to put things into context from a travel demand perspective. Now, I know there's been a lot of discussion in terms of gloomy macroeconomic picture, technical recession, but by all accounts, we have not yet seen a material impact in the overall travel demand. Clearly, the industry's changing in terms of certain industries reactivating in more recent months in terms of cruise, city travel, international travel, but the overall demand picture remains very robust going into the third quarter of this year and into next year. And this data point here is something that we collected from Google consumer surveys, more than anything as just kind of a gut check to see what's happening from a travel intent perspective. Just under 50% of Northeast region households expressed some intent to travel to warmer weather destinations this coming winter. So you can take that for what it's worth and put that into perspective. But overall, a very positive picture in terms of overall travel demand going forward. Workforce deficit. So this is giving us a perspective on how we are doing in terms of overall accommodations, labor supply. And we have made some progress over the last 12 months. Total supply is up by 18%, measured from 2021 in July to July 2022. But we still have a ways to go in terms of getting us back to pre-pandemic levels. And in fact, the current workforce is roughly 17% smaller than what it was in 2019. So you can put that into perspective in terms of how much further we have to go in order to get us to a level where we can actually meet that travel demand as the economy opens up fully. Wage inflation has been a persistent issue over the last couple of years, and we believe that wages still have room to go up based on some of the other leading indicators. But overall, wage inflation went up over 23%. Average wages went up over the last couple of years since 2019, over the last 3 years. Huge rise, much higher for the accommodation sector than overall services at 15.5%. So we think that based on some of the other key indicators, including job openings that are at historic highs at the moment, well, running average through June, which will likely track into the fall and winter, we should expect wages to continue to go up and overall cost of doing business as an accommodations operator to continue to go up. Worker churn in terms of the number of individuals that are leaving their posts remains stubbornly high for the industry. Although we have stabilized considerably compared to what was happening in 2020, the overall churn rate remains high compared to other industries, as well as at historic highs, pre-pandemic levels. But some good news here in terms of overall stabilization, which kind of leads us to one key finding or takeaway from the report. There are many, but in that this idea of the Great Resignation, right? For the most part, the Great Resignation is over in that we are not seeing large droves of individuals leaving their posts in search for greener pastures. But nevertheless, the war for talent for the accommodations industry continues to rage on. And this is something that operators are really going to have to factor in when it comes to their overall recruitment and retention strategies over the next couple of quarters. With that, I wanted to thank you for your time. Feel free to visit extenteam.com, go to the Insights page to download the full report, or you can reach out to me directly, luke@extenteam.com, or message me on LinkedIn. I'd love to hear more about your business and how we can help with your skills and coverage gaps. With that, thanks again for your time and have a great day.